Hello and welcome to the weekly Forex Review here at xm.com. My name is your currency analyst and I'm here with my colleague Rafi Boyajan. So Rafi, it's been a bad week for the dollar. We've seen the dollar index today fall to 91.01 at its lowest. This is a more than 2.5-year low. On a weekly basis, the index is down by 1.7%, while in the bigger picture year to date, the US currency gauging it via the dollar index is down by close to 11%. This week we had some Fed speakers making comments on the dovish side and pushing the US currency lower. Can you talk to us about that, as well as maybe some other factors pushing the dollar lower?
That's right. Like I said, the dollar hasn't had a very good week. We saw dollar yen dropping below the 108 yen level. We did have several Fed speakers. This was the last we heard from Fed officials as of Monday. The blackout period starts ahead of September 19th, 20th FOMC meeting. And pretty much all Fed speakers were rather dovish, at least more dovish than their previous speeches. Even the slightly more hawkish tones were from the ones that we already know are the more hawkish ones within the FOMC. So that did weigh on the dollar as well as on US Treasuries. We saw US Treasury yields, the 10-year yields, dropping to 10-month lows. But apart from that, we do have the ongoing uncertainty over North Korea. That is weighing on risk sentiment in the markets and on the dollar. We also had, of course, Hurricane Harvey hitting Texas, and now we've got 3 more hurricanes in the Caribbean. The Hurricane Irma, which potentially could be hitting the US West Coast during the weekend, and that could potentially impact third quarter growth for the US. We did have maybe some positive developments regarding the US debt ceiling. President Trump came to a deal with congressional Democrats to extend the debt ceiling limit for 3 months until mid-December. So that did lift the markets a little bit. And although we had President Trump making more speeches, continuing with his campaign to push for his tax reform plans, all of that has only given the US dollar just a very modest boost. And of course, what we're seeing with the euro surging ahead, that's also weighing negatively on the US dollar.
You did talk about tensions in the Korean Peninsula, and with that, we've seen gold today continuing to rise. It rose above the $1,350 an ounce level today. That's a more than a 1-year high. Gains on both its safe haven perceived allure, but also on the back of dollar weakness. And with that, let's move to the Eurozone. The European Central Bank today completed its two-day meeting on monetary policy. Some were expecting ECB Chief Mario Draghi to talk down the currency. He did attempt to do so, though his comments were on the soft side, and instead the euro rallied. Today, it came close to the 1.21 handle versus the dollar. That's a more than a 2.5-year high. What's your take on this, Rafi?
It was a bit of a strange response by the markets, because we did see Eurozone government bond yields falling after pretty much after the ECB's announcement, where they actually maintained the easing bias. This was a bit of a surprise, given that we're getting close to tapering, and at the same time the ECB is saying that they could potentially increase the size of asset purchases if needed. But then we also saw the euro rallying. The euro rallied mainly because Mario Draghi in his press conference did confirm that most likely in October they will make an announcement. They will come to a decision on how to start the withdrawal process from the stimulus program. And at the same time, Mario Draghi did refrain from verbal intervention to talk down the euro, although he did say that a stronger euro would potentially hurt growth and inflation, which would impact ECB policy. Markets were perhaps anticipating maybe a stronger language from Draghi, so all of that pushed the euro, like I said, close to the 1.21 handle.
Mm-hmm. What seems interesting to me is that it seems to me the case that the euro rises on nothing or almost nothing, and one might say that it might also fall on nothing or almost nothing. But with that, let's move to other central bank meetings this week. We had the Reserve Bank of Australia keeping rates on hold earlier in the week, but perhaps more interesting was what the Canadian Central Bank did. It unexpectedly raised rates. Can you talk to us about that, Rafi?
That's right. So this was the second rate hike for the Bank of Canada this year. It follows from the one in July. So we saw two consecutive meetings of rate hikes, taking the rates up by 0.5 percentage points in total this year. Analysts are expecting another rate hike this year. Potentially the next one will come in 2018. And like you said, this was a bit unexpected because most consensus estimates were for the bank to move in October. Instead, they decided to act earlier at the September meeting, and this drove the loonie to a 2-year high against the greenback.
And with that, Rafi, let's move to next week's economic calendar. What we should be expecting?
So we have another central bank meeting coming up next week. Actually, two. We have the Swiss National Bank and the Bank of England. The Bank of England, there's not going to be a press conference this time. We're not going to have a quarterly inflation report either. So most likely will be a quieter affair, although it will be interesting to see how many MPC members vote for a rate hike. This time around, we have seen more MPC members becoming hawkish, but we might see that actually a reversal of that given the weak data we've been seeing out of the UK, talking over which we're going to have inflation and unemployment figures next week. In the US, we're going to have inflation and retail sales. We're also going to have job numbers out of Australia and industrial production and retail sales numbers out of China.
Thank you very much for your analysis, Rafi. Thank you everyone for watching and have a great day.